market action and really what to expect now going forward. Jinesh, good to have you with us. I've been trying to filter through some of the commentary that's been coming in, and it's still looking a little uncertain or difficult to tell, at least in the near term perhaps, which way things will go, whether or not the impact of the second wave will be a little delayed, whether we will actually see that momentum on demand pick up sooner than anticipated. What's your sense, Jinesh? Are we heading into a scenario where we'll suddenly see a big hit 3-4 months down the line, or do you expect this recovery to be delayed but still slow and steady and gradually inching back?
Yeah, hi. So if you really see Q4 numbers of fiscal year 21, I think all the numbers have been coming in good shape, and they have been better than the expectations as well. And as we see, the economic recovery was strong, and we had almost come back to almost around pre-COVID levels. However, then you got into a second wave, and obviously things are not looking that great for next 2 to 3 months kind of a scenario, given the lockdowns and given the second wave impact even in now tier 2 and tier 3 cities. Frankly, it's a hope that things will taper down or plateau down over next 2 to 3 month period. Also, with the vaccination drive improving by May end, you should see things opening up maybe by June 15th onwards, and that is what the as of now estimates we are seeing. So I think it is more of a delayed economic recovery than deterioration in the economic recovery. So maybe Q1 will be sort of a lower than expected numbers, what you would have expected earlier before the second wave hit. But what sense we get is if, let's say, by Q2, Q3 onwards, things move back to momentum, then I think Q1 numbers can be recouped to some extent. Also, this time we have not seen economy into complete lockdown. Still, whatever understanding we have is still economy would be running at 40, 50, 60% depending on the sectors. And hence, it is not complete shutdown, and we feel that it is more of a delayed economic recovery than deterioration.
Okay, in light of that specifically, I want to talk about demand and how you see that hitting certain pockets, whether it be retail, whether it be discretionary, whether it be, and when I say retail, I mean it could be groceries as well, and, large chains, multi-format stores, a lot of which have just been struggling to keep the balance sheet intact over the past year or so. How do you see them being impacted?
One is going to get impacted for most of the domestic led companies, but as we see, if things open up by June, July, then things could be in a much better position. Hopefully, as the vaccination drive also helps us to open up the economy in a much better manner, what we have seen in US or maybe in UK, as you would see that they are now opening up the economy pretty nicely. Even in US, they are talking about not wearing masks in certain places. So I think if you go by those examples, we should not be feeling very negative. It's a wave, second wave. Obviously, we could have avoided it. We could have had a faster vaccination drive, which could have helped cut close the second wave in a much better manner. But having said that, I think we are just in a delayed recovery process, maybe another 2 to 3 months, and things should be much better off again for India.
Very clear.
Jinesh, the difference between the first wave and the second wave is commodity and the price inflation in underlying commodity prices. While that has made some of the corporate balance sheets look good, that may not be a factor going forward. How do you see this factor playing out?
So clearly, commodity is on a tear, be it hard commodity or a soft commodity. You can call it because of the revival in demand from a lower base in developed world now as they are opening up. Also, a lot of money is sloshing around in the world, which will finding its way into different asset classes. And also, there is in some commodities there is a supply-demand mismatch due to ongoing geopolitical tensions and so on and so forth. So I think it is combination of everything which has come together, which has led to this massive rise in the commodity prices, which will in a way impact inflation at some point of time, and that is what the risk we run for the world as well as for India. Having said that, if it subsides over a period of time and it is better, and if the rise in inflation is not beyond proportion, then I think some inflation is always good because it is easy for companies to pass on the prices. The pricing power comes into the play, which is in a way good for equity markets, because if companies are able to pass on the pricing without any problem, and there is an economic recovery where demand doesn't get distorted significantly, then I think it's not a big issue. But let's say if inflation goes out of proportion, then obviously there is going to be serious challenges we are looking at.
How do you see things moving in the IT space? I'm not talking about the businesses. Businesses will grow in double digit because of the base and because of demand. But how do you see the stocks moving? Because last year IT stocks on an average were up more than 80 to 90%. Is there more juice left in some of the large cap IT stocks?
See, clearly, as you rightly said, that already they are in a good shape in terms of demand. Many of the projects which would have come 2-3 years down the line are now coming to them, and hence the order book has swelled significantly, and that is what the optimism is for this technology stocks, that if they continue to deliver a double-digit growth rate with decent cash flow generation, there is a room for making returns. Obviously, once the economy opens up nicely and the COVID crisis goes away, the shift will happen from technology to, let's say, more domestic driven economies across the world, and be it financials or be it retail or be it some autos or something else. So obviously, to that extent, the money will rotate from this sector to the domestic sectors. But otherwise, on a standalone basis, is there a room to grow? Answer is yes. Is there a room to make return? Answer is yes.
Jinesh, hi there, morning. Wanted to also understand your view as to, some of the prominent names within the pharma space that would give you comfort for a long-term time horizon. In light of what's happening with the pandemic, the overall valuation picture, do you think that this is an area of great comfort?
See, I think I think we should not be just looking at COVID as an opportunity for a pharma sales or profitability, because that can be short-termish in nature. The more long-term proportion should be in terms of what kind of therapeutic segment the pharma, the specific companies are going into, and obviously there is again a good room to grow for them over next 2 to 3 year period. Many of the companies are coming out the problem of US FDA issues which had cropped up and had led to problems in their facilities. So if they are sorted out, and if they are able to again come back to their old mojo of, let's say, 15% kind of growth rate, and maybe COVID can be one of the trigger for more product innovations, then I think it's a good story to play. But only playing COVID-related stories is more short-termish in nature, and which can backfire. Let's say if the second wave just goes off in next 2 months' time.
What about the massive opportunity that presents itself within the broader markets, given the kind of moves that we've seen of late, the kind of outperformance? While one would tend to also stick with quality names within the mid-cap space, what's your advice to investors on capitalizing on this move?
See, clearly when you are seeing economy coming out from a lower base, and this is across the world and even in India, the tendency of growth rates are higher across these sectors. The volume picks up across the sectors. And for India specific, if you are really looking at 6.5% real GDP growth rate for 2-3 years on an average, clearly the growth momentum would always be higher on the mid cap and the small cap side of the stories in the sector as compared to the large caps. However, large caps companies are also becoming more and more efficient with the use of technology, and so you cannot completely ignore them, because obviously as we are seeing profit pools are getting narrower and narrower to few companies who are able to innovate and who are able to demonstrate the efficiency game with strong balance sheet. So our approach is to always keep that risk in mind of slowdown or anything or disruption. And with that view, multi-cap strategy is the best way to play around, where large caps will continue to give you those compounding returns as they improve their market share, whereas the mid and the small companies in the particular sector, if they have a differentiated business model, if they have differentiated product basket, will definitely continue to grow at a higher pace as compared to the incumbents or the large caps. So best way to play, we feel, is multi-cap strategy, keeping risk in mind over a longer period of time.
Are there any specific themes in the broader market, Jinesh, or are you just seeing them as corresponding plays to the pockets that you're already interested or identified? Would there be anything outside? For example, some say that this rally in specialty chems is now over, for example. Would that be an area that would still come to your mind, or would you just go for the mid-cap names or a select bunch, from IT, pharma, pockets that are already, being seen as preferred plays at a time like this?
Yeah. So at this juncture, where there is so much volatility around the world, also due to COVID crisis and also due to how the economies will really shape up over next 2 to 3 year period, I think this is not the time to ignore any theme, or this is not the time to ignore any sector. It is better to identify 3 to 4 stories in a particular sector and just be with them with a longer term view. Over a period of time, once things settle down, you will really get to know which theme would really play out. But at this juncture, if you really see, there is a lot of sectoral rotations which keeps on happening depending on the outcome of this COVID crisis, depending on how things will improve on vaccination, depending on how economies will open up. So as of now, you are in a situation where things are very volatile. You don't know which way the economy will move on a sustainable basis. So it is better to remain diversified and keep stories and invest in those stories across the sectors, so that you don't miss out any particular theme which is about to emerge or which will emerge over a period of time.
What about PSUs? Is that a clear avoid? Is there a case building up there, given the kind of action we started to see even on the PSU banking names? We already know the divestment agenda and many that sort of figure there.
See, I think obviously some PSUs are looking good. However, if they fit the metric of what we really look into our universe in terms of growth, in terms of scalability of the business model, in terms of demonstrating sustainable good ROEs and cash flows, if they fit our criteria, then definitely we would like to look into it. However, it is tough to give you a broader view on the entire PSU basket. Because different companies have different growth rates, different ROE, and different cash flows. So as I said, stock specific, yes, there could be an opportunity, but not generalizing it.